coming in hot like a meteorite about to strike the earth and explode. That's what's happening. And it's all happening right about, Steve.
Now.
Yeah, right about now. Welcome to Lone Officer Breakfast Club, everybody. I'm your host, Frank Garay, here with a bunch of really cool people. Got my teammates on board with me. Gen Z, of course, running the show. Keep things lively. Steve Kyles. Yeah. Always a pleasure. He's always cool until he's not. No, I'm kidding. And of course, we got Justin Hubbert. Justin Hubbert in the house. Going to talk about some loan stuff with us, that kind of a thing. Oh, so here we go. Starting again. It's another day on the Lone Officer Breakfast Club. Man, oh man.
Hey, yesterday was a cool day.
It was a cool day.
If you missed yesterday's episode and we talked about the reasons your agents or agents might be ghosting you and what to do about it, man, what a that one pager, great tool, great resource. And so go back and watch it. I mean, it was good. It was good.
Yeah. No, I dug it, man. I really dug the sharing too. The wins that we were hearing yesterday were pretty epic, man. Pretty good stuff. Speaking of wins, maybe we should, let's get the party started with some. But before we do that, let's just get into the chat and see. Hey, say good morning to us, guys. How's it going? How you feeling today? You know what? You know who we got to talk to, Steve? Guess who I'm going to call on?
Never guess.
Come on now.
Never guess.
Take a look around. Who am I going to call on?
Not doing it.
All right.
No, that's like asking your age. I'm not doing it. Just tell me.
All right. Well, it's Kim Creighton.
I would call on Sue Moody.
I'm calling Kim Creighton.
You were guess Kim.
Kim. All right.
You did? Did you think that?
I did.
Is that what you thought? Yeah. How could we not? It's been a minute since we've said hi. So, Kim, can you unmute? Can you talk to us? Can you shoot the breeze?
I thought we were going to talk to Sue Moody.
We're going to do both.
Well, all right. Sue Moody's next. How's that? Yeah. So, what's going on, Kim?
Good morning.
How are you, man? What's happening?
I'm good. Just sipping on a little tea.
A little tea?
Yeah.
A little tea. There's not any vodka in that, is there?
No.
Absolutely not. There would never
Odorless,
be.
colorless? Is that what they say? Odorless, colorless?
Right. Yeah, that's what it is. But are things going well? It's been a minute since I've seen you and gotten to talk to you. So everything cool, man? You got some business going through the door? What's going on?
Yeah, everything is going well. I cannot complain.
Good.
As we're rolling into 4Q25.
Yeah.
No, as we're in, we just started 4Q25.
Yeah.
Can't complain on it.
So any recent cool stuff that's happened you can share with us? Something we can all maybe you got something, hey man, this happened, maybe we can learn from it. No pressure, not putting you on the spot at all, anything like that.
Well,
but no, you know what I mean? Just curious. Anything happened recently where you learned something from it? Like, I'm not going to let that happen again, or, oh, that's good to know, or anything just by chance comes to mind? If not, it's okay.
Well, the biggest thing for me is to make the phone calls, like even if you're just connecting with your database, even if you're just, hey, how you doing? Hello, because I've actually picked up business from that. I just called to say, hey, happy birthday. It was actually a happy birthday call. Call just wishing a happy birthday. And then a couple of days later, hey, I need you for something. So definitely, reach out, not just asking or looking for business, but being a person and, happy birthday, happy anniversary. I saw that your daughter just graduated, high school, or, oh my God, she just was in the pageant for whatever, but just making that connection. So that was.
And that turned into some deals.
Huh?
That turned into some deals?
Yeah. Well, a deal. So, but the more I do it, I'm sure, with more people, yes.
Mm-hmm. Good, man. Yeah, super important. Stay in touch and say hi and just be a person for sure. That was a lot about what we talked about yesterday, was just being a person, even with our real estate partners. You know what I mean? Just that kind of a thing. So cool. Well, good stuff, Kim. Glad to hear. Is it a good loan amount?
Any loan amount is a good loan amount.
You got that right.
Dude, yes, ma'am.
That is true.
Yeah.
All right, cool. Well, hey, man, so good to see you, Kim. Thanks for letting us dive in on you there. And
Kick
chat
on me this morning. Oh, yes.
Awesome stuff. Well, let's go ahead and get to Sue Moody, because apparently, Sue, you are like the person everybody wants to hear from. So what's going on? Give us something you learned last week, something that's like, man, that was a good thing to know, or that popped up, or, and in the chat too, guys, if you learned something, over the past few days, like something happened where you learned from it, like, I won't let that happen again, or I'll do it differently next time. If you got something like that, throw it in the chat. I think that'd be helpful this morning. So, Sue, what about you? Anything like that?
Well, first of all, cheers to Kim. I'm a tea drinker as well. Don't do coffee. Yeah. Well, September was a crazy, crazy month for me. My son got married, and it was on our property, and it was just a lot of work. So it was really difficult to concentrate on business, but I did have a couple wins. I started a series. I don't know if anybody on here follows my business page, but I started a series called Behind the Signs.
Behind the Signs?
Behind the Signs. And
when you say a series, what do you mean? What is it?
So I get a realtor in the car with me, and we drive around our town.
Okay, gotcha. You started a podcast thing, okay, good. I thought this was like a Netflix thing or something like that.
No, but it's in my car, and we're driving around, and I'm asking the realtor questions. And so that's my gift to the realtor, that once it airs, people can get to know them. They're not just a name on a sign in a yard.
Yeah.
And we have a little fun with it. So the very end of it, we do a little carpool karaoke. And
oh my God.
Some are good singers, some are not, which makes it even funnier and fun. And since I've been doing it and we've been airing them, I've had other realtors reach out and said, hey, I want to do that too.
No.
Yeah. And because of that, and again, never assume, this is the big word here, right? This is the lesson, is two of the realtors, they had other very good friends for life that were mortgage officers, and I didn't call on them because I just assumed that's where they were sending their business.
Sure.
And I was very wrong. They don't send their business to them. And now I've gotten 2 referrals from them. So
that's cool.
That's part of that. And then just my big win is very non-traditional. So me and my husband, we own 55 rentals. And
Sue's buying. Yeah.
And my husband is a builder, and then he also has a separate company that's just roofing. And so our lives are very hectic.
Yeah.
And it was becoming very hard to concentrate on my business because I'm also running all of those. And I finally convinced my husband that we needed a Moody family assistant, and she's hired, and she's just kicking it. And I'm back to time for me to make my calls.
That is cool. Good stuff.
That's my September.
That was a good conversation to have. That was cool, man. I really dig the series that you're doing. That's neat.
Very memorable. Yeah.
Yeah. And then it's getting them to call you. That's crazy. That's awesome. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. Well, hey, don't forget about Park Place Financial for your construction loans, Sue Moody and your husband. Don't forget. Okay? Because we have Justin Hubbert here, and that's exactly what he does. One of the things he does. But I appreciate everything. Yeah. Hey, so thanks for the participation this morning, guys, Sue and Kim. We really appreciate that. But I think we're about ready to rock and roll. Don't you, Steve? Think we're about ready to rock and roll?
Let's rock it and roll.
All right, we have Justin Hubbert from Park Place Financial. Everything you've ever wanted and didn't want to know about fix and flip loans is about to be dropped in your lap right now by Justin Hubbert. So, Jen, you got to give him ability to share. I think he has a slideshow that he wants to bring up. And I tell you, fix and flip, and Justin Hubbert are how I literally how I got started in the private capital type of arena business is because of Justin. And my first attempt at doing private capital stuff was fix and flip. And so this is a great, what's the word for it? Great segment in the business or great pillar in the business, something like that. It's really, really cool, very profitable. And when you got a great partner like Park Place, it's not very hard to do. It's pretty easy. They make it super, super easy. So, but there's a lot of things you need to know. And so, Justin, take it away. Tell us what we need to know, the ins and outs of the fix and flip.
I appreciate it. Good morning, Frank, and good morning, everybody. Congrats, Kim and Sue, on all your success. That's unbelievable to hear 50 plus properties. That's hard to
I
do.
know.
So that's a
Wow.
big shout out. So
Yeah.
that's a lot of hard work, I know. So congratulations. Good to meet everybody. I know some of you, but some of you I don't. So I'm Justin with Park Place. We're based out of Austin. We're a private money lender, and so I appreciate Frank having us on here. So he'd asked us to kind of talk about people that fix and flip and how those products work. And so wanted to go through that a little bit of detail today on what that is. Um, and so I'm going to share a screen real quick. Hopefully you guys can see this. So there's my contact information. I've lost a little bit of hair since that photo was taken though. So, uh, but we're a private money lender, so a lot of people get different connotations of what that is. There's basically five things that we do. We try to do them really well. Everything is investment property based, so nothing we do is primary residence based. So these are all for-profit ventures for your clients. So we do fix and flips, which we'll talk about a little bit more detail. And there's a lot of opportunity there because there's a lot of flippers that flip 1, 2, 20 homes a year plus. And so each time they do that, if you have a good relationship with that client, you can get that business in a repeatable method. Another thing is like builder loans. I know we covered that a couple of weeks ago. There's so much opportunity out there with new builds right now. And in fact, some new data came out about 2 weeks ago, said that's going to be about 40% of the market they think in 26. So that's a huge opportunity there. We also allow cash outs for builders that maybe have some inventory that are stuck. Could also apply to flippers, but it's mainly for builders a lot of times that are trying to hold inventory at a higher price. We do bridge purchases as well. So if you get somebody that needs to close on a property, a couple days, not a whole lot of questions asked. And then I know everybody is familiar with this DSCR. There's a huge amount of opportunity out there with not only us, but other lenders out there. There's all sorts of niches in that business as well, like with Airbnb, and you can use projected income for Airbnb. You know, they're now offering 85% purchases. Rates are in the low to mid sixes as well. And so the target audiences are a handful of people. A lot of people think, well, you have to have a bunch of experience to get into to help a client that wants to flip a house, and that's just not the reality there. It's a scenario where like first time flippers or even first time builders can be helped, and so those are the audiences there. I wanted to share a few details I came across over the last couple of days. There's about 70,000 flips every quarter being done in America today. So
Hmm.
that's just a tremendous opportunity there if somebody is looking to flip a house and also as a loan officer for business that's out there. And most of those are getting financing of some sort in the private sector on most of these projects. So, what is a fix and flip? I know Frank had asked that early on in our conversations, and one of the things that main things that fix and flips offer is it's primarily based off of the property. That could be location, could be the value. After repair value just means after they've done the rehab. And then don't get too caught up in like fix and flip. If somebody's like, no, I want to buy it and hold it. We kind of put that in that same goofy category of fix and flip, even though it technically be considered a fix and hold. Uh, Financing as far as leverages, just like you see like in a cycle of different real estate markets is going up. And so we now offer as little as 6% down for experienced borrowers. And then if you have a little, if you say you have little experience or maybe zero experience, it's more in the 15 to 20% down category. Renovations could be big or small. It could be as little as 20,000. It could be 800,000 or 2 million. We're kind of agnostic on that. But there are no tax returns to qualify. So we mainly look at the basis of the property details. We do a soft pull on the credit. So we even do that on DSCR. There's no hard pulls anymore on anything of our product mix. And again, these things close very quickly. And a lot of that's because we just don't have to go through those goofy words like RESPA and TRID. These are commercial purpose loans for the most part. Um, these are quick turn loans. So a lot of people are like, well, these rates are higher. And usually these flippers are only in these properties for an average of 3 or 4 payments. So the rate's somewhat irrelevant in that grand scheme of things. But they're 12 to 18-month loans. Our average is about 7.5 months right now for a flipper to get in and out of that property. if you kind of think about they don't have a payment this month, potentially next month, just the way that mortgages work, it kind of leads them to bring in, 3 to 5 payments to closing, or I shouldn't say to closing, but along the way. You guys can get paid. We pay a lot of brokers. I see a lot of names here that we paid in the last few weeks, even on this podcast here. So you can make 1 to 2 points. Generally, we charge the same similar amount. We lend nationwide, urban, suburban areas. The property condition is really irrelevant. And I'll show you some photos here of what properties we financed in just recent days that are in somewhat bad shape. The other thing is you don't have to be licensed in most of the states to refer the business. So if you have a loan, say in Florida, but you're not NMLS licensed there, that's okay. We can actually still broker the loan and pay you out on that. And then most of these loans close in an LLC. Certain states do allow us to close in a personal name, but for the most part, these are people that close in an LLC. And you can have 10, 20 investors into any project as well. We'll just usually make the top 1 or 2 people guarantee those projects in regards to being on the loan. Um, this is a good reason of like why you guys might see opportunity out here, and why business might be available, that maybe you're needing extra business or looking for extra business opportunities. Being able to close a loan quickly could save that realtor relationship. It could really help you gain the trust of that realtor for those conventional loans that they have as well. These also turn into a lot of these fix and flips. About 50% turn into fix and rents. So there's DSCR opportunities or potentially even conventional opportunities there for you when they get the flip done. We've seen a lot of people become heroes for realtors in aspect of these resales are just maybe struggling because they just don't meet conventional guidelines, or they're you might see it where it says it needs private lending or hard money or cash offers. That's where we can come in there and help with that, and then also provide the financing on those. So generally, we finance some percentage of the purchase and then 100% of the rehab, so 100% of the renovation budget. So we're on these, there's not a big concern if there's major renovations needed. And then on the repeats, there's a lot of opportunity here because our average flipper does about 3 homes a year that we work with. And so where you might see a sales cycle for a few months, those are now in or a few months that we can help out on a fix and flip. Sometimes on the conventional side, that might be 5, 10 years before they use you again because they're just not going to move in the house. We consider 3 types of rehab. There's light rehab. This is kind of paint, carpets, doors, maybe some popcorn ceiling. And then we have the heavy rehab, which is kind of adding an ADU or adding square footage, moving some walls. Sometimes that's permits required. And then the third type is just ground up construction. And that could be mid construction or it could be just flat land that needs to go vertical. And so we also do that. We do that in a variety of manners, including subdivision financing and putting in roads and different horizontal development as well. So some of the highlights of what separates us from, say, a lot of other fantastic fix and flip lenders is I mentioned this earlier. We only do soft pulls on credit. So I know trigger leads are like a big issue recently. The way to avoid that is just to either not pull credit or do a soft pull. So everything we do is a soft pull, including DSCR. So it kind of eliminates that. Also eliminates the burden of maybe a borrower concerned about possibly having the credit go lower because he pulled the credit. We work with zero experience all the time, ground up construction or fix and flip. And then we have 2 full-time in-house appraisers. So we do a lot of internal valuations in regards to appraisals. So if you're looking for something like, hey, Justin, this guy got in a bind and he really needs to close this afternoon. If title's ready, things were lined up, we can kind of come in there in a very quick period of time, a few hours, and get that closed. As Frank knows, I always say don't give every one of our loans within the last few hours, but we will try to accommodate that. And the way we do that is through internal appraisals. And then if somebody is needing to build in the payments, so say they're saying, hey, we're going to do a fix and flip, but I don't want to make payments along the way. There's options for us to roll in the interest as well, similar to maybe a construction loan with a local community bank. And then we also have no income docs. So we really go to just the value of the property. Do we think the borrower can pull this off? And there's really no income or job limitations here. So we don't care if maybe they lost their job, unfortunately, and they're looking to flip a house. Hey, that's a great opportunity. We can come in there and help them finance it with little money down, perhaps supplement some of their income. So there's kind of five yeses. If you get yeses on these five, there's a high probability we can actually lend to them. So the experience, although zero is required, it does determine the leverage. So if you have less experience, as we mentioned, maybe 15, 20% down. If you have a lot of experience, we consider that like 5+ in the last few years, then you can put as little as 6% down. The assets, the down payment, we do look for 6 months of payments as reserve or 10% of the budget. So that's kind of the numbers for the reserves that we look for. Credit, low barrier to entry there at 640, but we aren't really looking for somebody that it just isn't paying their bills. We're looking for somebody that maybe they have a high balance in credit cards because they're doing this renovation. It's stalled out. They're now maxed out on credit cards. That's okay. We can lend to that. And then the project details are probably the most critical piece of the equation because we're doing this for a profit, that we want to make sure that the purchase price plus the rehab equals a number that's lower than the total cost of that compared to the after repair value. So we look for somewhere 10 to 15% total profit once the project's done. And then location's a critical part. So we lend to areas urban, suburban across the country, but not really looking for this Taj Mahal in the middle of nowhere. Might be worth $10 million, but it's just really tough to actually get that thing sold. So those are the kind of things that we're looking for. So if those are yeses, then there's a high probability it's a viable fix and flip loan. I know I've talked about leverages, so I want to kind of give you guys a quick snapshot of this. There are some other data points, whether the rehab's very detailed and heavy, or whether maybe it's light. This is more on the lighter side, but you can see that people with 5 more flips in the last 3 years, you could do that with as little as 6% down. The other side of that coin, if you have first time coming in, you need 15% down. Depending on, again, on the rehab amount, that could be 20%. So just keep that in mind. These are kind of loose guidelines, not exactly like written in stone. It goes more to the project. But you'll notice here we also finance 100% of the construction almost every time. When you ask about like, well, what's required, Justin? I get that question probably 8 times a day. Here's the list. It's super simple. We can take an application that you have, or we can take an application on our system. You can actually just gather the information and take it over the phone. If it's a purchase, you'd have the contract, a renovation budget. We have a template, or maybe they have one from either them or a GC. You'll notice we only require 1 month bank statement. So I know a lot of conventional financing requires 2 months or more of bank statements and sourcing deposits. We're not really that concerned about where the money comes from. In fact, we can allow like credit card advances. We just want to make sure that the money's not coming from the seller or an interested third party where we might have a conflict of interest there. If it's in an LLC, we'll get some LLC documents, which is like articles of organization, operating agreement, driver's licenses, I think everybody's familiar with. And then if you have experience, we'll get the list of experience and what you've actually flipped or haven't flipped. And then just insurance information. If you have those things, if title is ready, it's not not impossible to get the deal done the next day. And so those are the kind of documents we look for. I always mention this, and what excites me the most is like the residual income opportunity for conventional loan officers, because what I mentioned, like, a conventional loan officer generally gets a borrower and say they love you, but they might buy that house like once or twice in the next 10 years. Flippers do this sometimes 1, 2, 3 times a month. We have a couple of guys that are doing 70, 80 houses a year. And so they're doing once a month, once a week, sometimes even, twice a week. So there's a huge repeat business opportunity there. And then those kind of flip over to other types of loans on the other side that you can help them with as well. We don't charge when they convert over. So there's another opportunity there for somebody to make an additional revenue stream. If you said, hey, they did a flip and they converted to DSCR, we don't charge anything to convert them over to DSCR. They will have a traditional title policy or some third party fees with recording. As far as our fee, that is zero if we flip them over. Here's a few properties that we've financed recently. You see a mid-construction refinance that we helped them out. They kind of stalled out. They thought the budget was going to be around 800,000, ended up being about $1 million. So we were able to refinance them, give them an extra couple $100,000 to renovate that. Another one here that's kind of mid-construction there that got stuck. We've been able to help them with that as well. And then here's another one just to show you, like we just closed this one actually yesterday. It needs a lot of work, as you can tell, but it's something that we finance all the time. So the more rehab, again, that's needed, the more down payment that's needed. Low side, 6%, high side, maybe 20-25%. That's kind of the details. I know we ran through this very quickly in a short period of time. I'm happy to send you guys the slide deck. But if you have more questions, the easiest way is just go to Work with Park Place, go up to the top corner here, click Quick Info. If you want something specifically or you have a specific scenario, you can plug that into the notes there, and we'll reach out and get you the information needed. If you just want the slide deck or you want our product matrices, happy to send that as well. But workwithparkplace.com.
I love it. Frank,
yeah, I'm gonna put
those questions in the chat.
Sure. Let me just do this real quick. So I'm going to put the link, Work with Park Place. Or Jen, could you do that? Workwithparkplace.com. Drop that into the chat, please. And then also, if you just want to get the quick info, you can go to it's parkplacematrix.com. If you go parkplacematrix.com, it goes straight to that button, basically. So you don't have to go click one and then click the other, just Park Place Matrix. So both of those, throw those in there, Jen. Yeah, good stuff. So yeah, okay, Steve, go ahead. What's the questions you wanted to get addressed there?
No, were there some in here that you saw that you wanted to address?
Well, I was answering a bunch of them as we went along. Jim was wondering, hey, how do we get paid? And the way that I've always done it with Park Place, and maybe I'm special, but I think it's probably the best. Anybody can do it, but I just let them know, hey, I want a point on this or whatever, and they'll just build it into the price, and then after the deal's closed, I send them like an invoice saying, hey, they tell me, send us an invoice for your fee. I send it. Can you pay them on a 1099, Justin?
Well, Frank, first off, you are special. So, but everybody is still included in this in how we compensate everybody.
Yeah.
So we have a broker agreement. It's really easy to get signed up, and then we can pay you either on the HUD if you like that, or maybe you want us to be the bad guy. We'll just build it into ours and pay you afterwards. So
that's
a
what
lot
I
of
do.
Flexibility there. It also depends on the state. Some of them we have to collect it then pay you. Everybody's paid 1099, so in the broker package we get a 1099 from you.
Yeah,
Get you paid, and usually same day, next day we get you paid.
They are super fast to pay. Just so you know, as soon as that deal's done and it's funded, they say, here, send us your invoice or however you worked it out with them, and they pay right away. So that's really, really cool. Hey, just as a reminder, if you're enjoying Loan Officer Breakfast Club here on YouTube, you can catch our live shows. The live shows are really cool because there's oftentimes downloads and giveaways. It's really, really fun. To subscribe, you simply go to loanofficerbreakfastclub.com. That's loanofficerbreakfastclub.com. Subscribe and join us on our live shows. They're 8:30 a.m. to 9 a.m. Eastern, Monday through Friday. Hope to see you there. One thing I wanted to point out, guys, though, and I told Justin I want to make sure you guys know this. So I was, brand new at this, just getting started, and, hearing Justin teach me all this stuff and getting loans going. And one thing that I learned about this is experience really is super, super, super important to them. That's really what's kind of driving the whole thing. Is like, what is their experience? Have they done this before? And I made the mistake a couple times and got corrected. And the deal still went through. It just, he had to change the leverage on a little bit. But I made the mistake of thinking, oh, well, this guy's done all kinds of build type projects and renovation projects. And so clearly he's experienced, right? So I was quoting rates to the person as if they were, and LTCs as if they were experienced, only come to find out that no, that really didn't count as experience. And so just understand the way I see it, Justin, is like if we're saying he's got 5+ in the past year, what that means is somebody bought the house, right? They renovated the house, and then they sold the house and they made a profit. That counts as an experienced flip. It's not somebody was helping a guy, and helps them all the time with stuff and knows how to do this and has done remodels for their friends and all that. That is not flip experience, And the other thing too is that you got to remember when renovation is one thing, but adding a room, that's another thing, or adding an ADU, that's a little different animal. So although they may be experienced in fix and flip and renovation, if they've never added square footage or added an ADU, that's a different animal, right, Justin?
Yeah, exactly. It just lowers the leverage, right? So
Yeah.
instead of putting minimal amount down, you might need another 5-10%. But yeah, so the best example is somebody that works at DR Horton for 10 years and maybe they're doing the framing for them, and that's a great builder, right? And so they know how to build that. But what we're really looking for is somebody that's actually been on the title and owned a property and flipped it. Because we look for the leverage is based on what do we think the probability that you will be successful, and the only way to really determine that is what's your history based on that, right?
Yeah.
Doesn't mean we can't lend to you, it just means you might need a little bit more money down. And again, the difference is here, 15% from highest to lowest. So it's not this huge like 50% down. It's whether you need 5 or 6% down, or you need 15 or 20% down.
Right. Yeah. I'm glad you brought that up. It doesn't mean you can't do it. It just means the leverage is going to change a little bit. It's just going to change. And they still got done. And I tell you guys, I did a huge one. We did it was Justin. I think it was, well, it's not that huge, but I think the purchase was like 1.4 or something like that. And he had like $800,000 worth of rehab that he had to do. And, went through, got done, got paid, man. So it's really remarkable. Hey, Justin, is it okay if we drop the slide deck into the chat for people?
Yes, I can do that. Yep.
If you can just drop it in there, that way they've got it there. That way they've got your contact info as well, because some people are asking for that. Oh, this is a great question. Can a ground up construction be on a primary home?
Well, so it's interesting because it depends on where they were living prior to. So if they were living in the house and then, hey, I'm going to move out and then we're going to bulldoze the house and build a new house, that becomes challenging because it truly was their primary at one point. If they're like, hey, I'm going to build this house for intentions of moving in, that's okay. Because we're going to do the loan and they're not going to be able to live in it until it's livable, right? So by the time it's taken out, when you take it out on a conventional loan or whatever the exit strategy is there, that's okay because on our loan, they're not living there. So the answer to that's yes.
Okay. The interesting question. Mary has someone who needs 500,000 to fix and flip their current house. That probably wouldn't work because it's the house they live in.
It's a primary residence.
Yeah, it's a primary residence.
These have to be investment.
So this is interesting too. So let me ask you this, Justin. I'm doing a fix. Okay, two questions. One, if you've got a guy who does fix and holds, like he's got 5 fix and holds in the past 12 months, is that experience?
That counts, yeah, because he's flipped the property. He might have held it, but yeah, he's fixed and held it. Yeah.
Okay,
we just
good.
want to see if they've done a property that's actually renovated on it. That's a great question. We get that a lot.
Okay.
A lot of people, when I say fix and flip, like that could be fix and hold, it could be fix and Airbnb, it could be fix and long-term rent. All those are in the same category there.
Okay. Yeah. And this is really cool too, because now there's only soft pull required on DSCR, right? Is that what you said?
That's right.
Yeah.
Yep,
so
exactly.
So is it plausible that someone could say, hey, I got a guy who's going to do a fix and hold, and at Park Place, we basically pre-approve them for the package? Like we go, okay, fix and flip looks good. We're going to do that. And guess what? When this is all done, it looks like we can do the DSCR on the back end too. So you kind of get the whole package done. It's 2 loans though, right?
Great point. Yeah, so we actually approve people on a 12-month basis. So we only pull the credit once every 6 months. Keep in mind that we only do soft pulls. So there's really, unless we told you, I guess you wouldn't really even know. But we do disclose it. But so once you're approved, you're good for 12 months. We might get an updated bank statement along the way, but that's it. So then it just comes down to contract and rehab budget and what's the after repair budget. So it gets a lot easier for your clients as they do 2, 3, 4 of these a year.
Yeah. Let's try and get those slides in there, Justin, if you can, because we're at the top of the hour and people still have some questions. And you really just go to workwithparkplace.com, get your questions answered, or Park Place Matrix. You can put in a note there, what you need help with. They'll jump right on it. And we're going to try and get that in there. Would this work for small builder? Yes, absolutely. Yeah, they love small builders, small to mid-sized builders, big builders, whatever. They kill on their construction loans, guys. They are phenomenal.
Yep.
There you go. There you go. The slide deck is in the chat, so you guys can download it. And Justin, your contact information is right on the first slide. So,
Yeah.
and
Yeah,
be
just reach out if
patient.
you have a scenario, you want more information, just go to workwithparkplace.com, top right corner, quick info. We get that information over to you.
Yeah, and then just be patient. Usually when we have Justin on the show, he gets blown up with quite a lot of emails, and he'll get back to you as quick as he can. But the best thing
We
to
do
do
have
is
staff
just
about 80, so we got some other people that can help and reach out to.
there you go. Yeah, he'll forward along. But the best thing to do, go to workwithparkplace.com, just put your info in there, or do the quick info button, and then you can put a little synopsis of what you got going on, put it there, and then you'll be in the mix. Bill Rudy Devers, what you got, buddy?
Quick question. Do you have any states that you're not lending in?
The only one is Nevada. You need a brick and mortar there. So the big states there, Nevada. We actually have lent in Alaska, some of these smaller states. So that'd be the only one of really of note. North Dakota, South Dakota just may not be a big enough city for us to lend in. We don't necessarily exclude it, but those are tough. But we're looking for urban, suburban areas, kind of 50,000 MSA. We've gone down to as little as 10,000. We'll do areas like Gatlinburg, Tennessee, or Destin, where there might be populations lower than that, but it has a rental market, so we'll do that as well. But yeah, nationwide, most times.
Well, how about DC?
Yep.
Okay, thank you.
Yep.
There you go. All right. Well, good stuff today. Good stuff, team.
Really
Everybody good?
stuff. Yeah.
Great.
Guys-
Justin,
guys
it's
think-
great to have you. You're a great solution. And I love, Frank, that you're just bringing solutions on that have been your kind of tool belt, because you're telling me all these cool deals you're doing. And it's like, now you're going to show us who you're doing them with.
Totally am, man. Totally.
That's
That's why I
awesome.
got
I love
Justin
it.
here. He has changed my life. I'm telling you that, man. Because I was
Great
really
to have you. I can
struggling
see
with
why.
what I want to do,
Yeah.
and he popped up thanks to Kevin Gillespie, and I said I'm going to go down this route, and now I'm successful at it. I do these things. So this
Well,
is
I love
this is
Kevin,
really
and yeah, it's the one thing that's exciting is like when you get somebody that's stuck and you're like, oh man, I can't figure out how to get this loan closed, and then you say, oh well, it just needs rehab. We'll just do a fix and flip on it, or a quick close bridge loan on it, and that's where the excitement is being able to help those that maybe those loans that get stuck that you can't figure out a solution for.
yeah,
That's great.
yeah, great stuff. You can do Oklahoma, right? We got an Oklahoma question.
Yeah.
Yep, Oklahoma.
We are in Texas here, so I'm based out of Austin. So I know we got a big game, Texas, Oklahoma this weekend. We will not upcharge that rate there for those Oklahoma folks.
All right. Good stuff, guys. Well, hey, man, thanks so much for joining us today, team. We really appreciate it. Hope you got a lot out of this. Justin, thank you so much. Always a pleasure. We'll have you back again and talk about something else that's cool. Let you do.
Yeah.
And so, all right. Well, let's go ahead and get on out of here. Now, we will be tuning in tomorrow a little bit, I think, from the event that's going on. I think we might have Kristen show us around a little, so that'll be kind of fun to do. But otherwise, man, let's just go ahead and get on out of here. You guys have a great day, and we'll catch up here with you manana on the Loan Officer Breakfast Club. Adios.
See ya.
Everybody have a great day. Oh, and I'll see you on All Stars in a little bit for the members.
Ah, yes. Call stars. Be there. Be square. Adios.